Good morning, students. Today we are going to discuss about international mergers and acquisitions. So basically, international mergers and acquisitions are basically which are taken place in the global world. As we know that in 1991 there is a era of globalization, privatization, and liberalization. So after that, there is a border mergers and acquisitions have taken place. So we'll discuss the introduction part. And there is a concept of international mergers and acquisitions. International mergers and acquisitions are growing day by day. These merger and acquisition refer to those that are taking place beyond the boundaries of a particular country. International mergers and acquisitions are termed as global mergers and acquisitions or cross border merger and acquisition. Basically, here we are facing a challenge of cross culture or cross country culture. Uh, so, there is a difficulty of managing that kind of merger and acquisition. The issue of mergers versus other means of achieving international business global uh, goals, such as import export licensing joint ventures, build on fundamental issues in the theory of firm whether to transact across markets or to internationalize uh, internalize transactions using managerial coordination within the firm. So what is the process of you can say international mergers and acquisition? That is a pre-combination first part, and the second part is combination planning and signing of agreement. Then the next one is post combination and implement the deal. So basically, when we are going one by one, pre-combination, this is basically an initial stage where we are basically initial target screening and pre-bid courtship of a potential target firm, the due diligence review of the target company, the price setting and the negotiation of the approach the partner will take the combination, and the agreement on the contract wording of the deal is in the pre-combination part. So there is a second part, that is the combination planning and signing the agreement. Here, once the deal has been negotiated, then the second phase is basically a combination planning and signing of the agreement. So we have to decide how to implement the deal and discover and working through differences and different ideas about the deal. So actually signing the agreement here, HR should play a major role to provide advice on how to implement the deal and anticipate problems that will occur during the implementation. And the third part is post combination and implementation of deal, where basically when the once the deal has been, you can say, uh, concluded, the hard work of implementation must be executed. So the third phase is basically HR has a key role in helping to facilitate the integration with the merged firms or between the firms in the alliance or joint venture. So there are some examples of international mergers and acquisitions. Uh, these are the merger of British Petroleum and Amco, the merger of Exxon and Mobil, the merger of Bank One Corporation with JP Morgan Chase and Company. There is one more acquisition, the acquisition of Compaq by HP. There is one more famous acquisition, that is the acquisition of Shell Transport and Trading Company by Royal Dutch Petroleum Company. So these are the some examples of international mergers and acquisitions. Then, what are the factors which are affecting international mergers and acquisitions? When we are talking about factors affecting, there are basically three major factors: economic factor, technological, and government factor. So, when we are talking about economic factor, that is impact in a money, technology, that is a technical one, and the third one is government factor, where you can say change in the policy of the government or government policy will impact the international mergers and acquisitions. So we'll discuss one by one. uh, Economic factor, the macroeconomic environment influence both the supply and the demand for the cross-border merger and acquisition. So there are some factors which are basically categorized in five types. So the first one is domestic economic expansion, where economic expansion in home countries increase earning and equity prices. Hence, the pool of capital available for investment abroad, in particular high stock prices, tend to facilitate large scale merger and acquisition transaction, as highly valued corporate equities can be used as a currency to pay for the acquisitions. Second one is global competition. We know that that is a major factor, as we have to compete with the MNCs. So that is the another factor which is impacting the merger and acquisition. Then the next one is economies of scale. As we know that international companies, or we can say MNCs, are using a high level of technology, or they are using, you can say, less labor. So they get economies of scale because they are ordering in a bulk, so they will get huge discount. So there are many economies of scale when we are going to a cross-border mergers and acquisitions. Then the next one is market expansion. When we are moving towards cross-border acquisitions or mergers or strategic alliances, basically these are open a new markets. So they will expand the market, and we have to diversify our products or markets. So that is a factor which is impacting international mergers and acquisitions. Then next one is exchange rates. Exchange rate, as we know that the prices of, you can say, crude oil, prices of dollar with rupee. So there is a combination of exchange rates. So here exchange rate basically impacts a lot, because we have to if we are investing money into the any other country's company, then we have to spend money in their currency. So exchange rate will also impact the international mergers and acquisition. Next one is technological factors or technology factors. There is a ease of communication, because we have a high level of technology, so we can easily communicate with each other. So there are chances of, you can say, good communication. That is a positive impact on international mergers and acquisition. Then the next one is high cost of R&D. As we know that there is a we know the domestic demand of the customer, but we do not know about the international demand of the customer. So we have to spend more on research and development. So there is a high cost of research and development. The next one is complex technology. uh, Sometime there may be a problem in the technology. We have to follow the complex technology. The growing complexity of the technology also requires firm to cooperate with the other different sectors. So cross-border research and development alliances are also effective for developing global product and system standards with potential competitors. So this is again impacting the international mergers and acquisition. The next one is government factors. Here we are talking about regulatory reforms. First, as we know that after 1990, There are three concepts basically which are open in India. One is liberalization, second is privatization, and third is globalization. So here the regulatory reforms are there. So regulatory reforms is regulatory regulated industries such as a telecommunication agreement on the basis of basic telecommunication services entered into force by WTO in 1998. So this will play a vast role. Basically, when we are talking about regulatory reforms, that can be fixed by the government. So government policies that have a, you can say, systematic risk that cannot be controlled by the any of the company. Uh, the next one is privatization. Privatization is also contributing to the cross-border merger activity by increasing merger and acquisition target and opening economies to increase competition. The next one is globalization and liberalization. Globalization and liberalization are also prompting changes in corporate governance that facilitate cross-border merger and acquisition and alliance in border range of country. So these are the factors which are impacting international mergers and acquisitions. The next one is strategies and its execution in international mergers and acquisition. So these are the, I think so, these are very much clear from the points. Number one is exporting. When we are transferring goods from one country to another country, that is called exporting. So that is one of the strategy which helps in increasing the, you can say, sales, or which will help us in execution of international mergers and acquisition. Next is licensing. If we can get a license, or we can get patents, trademarks, technology, or production processes, or in the abroad, then that will help us to execute international mergers and acquisitions. Joint ventures, if I'm talking about a Hero and Honda, that is a joint venture. That is a best example of joint venture. So when Honda entered into India, then basically they have a joint venture with the Hero Cycle in Ludhiana. So basically they will that will help them to execute the international mergers and acquisition. The next one is greenfield investment. Greenfield investment occur when multinational corporation enter into a developing countries to build new factories or stores. Greenfield investing is normally offered as an alternative to another form of investment such as mergers and acquisition, joint ventures, and licensing agreements. So basically, a greenfield investment occurs when multinational corporations are entering into the country to build new factories or stores. The next one is strategic international alliance. Uh, Strategic alliances are cooperation between two or more independent firms involving shared control and continuing contribution by the all the partners for their mutual benefit. So basically, strategic international alliance is cooperation between the domestic and the international company, so as to properly execute the mergers and acquisition. The last one is franchising. That is a most important or most popular concept which we are see in India, especially in the food chains. When we are talking about, you can say, McDonald's, KFC. So these are working on franchisee. So uh, when we are having a strategy of franchisee, that will easily execute uh, by taking a franchisee by paying some amount. uh, for example, if I want to invest into McDonald's products, then that will, you can say, cost me rupees in crores. So by which I can easily execute the merger and acquisition through franchising. Then the last one is the difference between the international merger and domestic merger. So here, when we are talking about the differences, there are six differences. When we are talking about the first one, that is meaning, we know that international merger is beyond the boundaries and domestic merger is within the boundary. The second one is currency. Here in international merger we have to use more than one currency, but when we are talking about domestic merger, there is a single currency which is involved. Exchange rate, foreign exchange rate are affects by international merger and acquisition, but in domestic merger and acquisition no forex has been affected. Risk is in international mergers there is more risk because policies of two countries, two country government are involved, but in case of domestic merger and acquisition there is a lesser risk. FDI, in international merger and acquisition that will boost FDI, but in domestic merger and acquisition that will not boost FDI. In the last one, capital intensity. In international merger there is a higher capital intensity, but in case of domestic one, that there is a lower, you can say, capital intensity. Thank you so much for listening. If you have any query, then you can text me personally. Thank you so much.